I want to point out the rig activity. The rig activity is very important as you're tracking any play in its development. As of this week, we have 31 active wells in Ohio, or drilling rigs in Ohio. Over a 3-month average, we've had probably between 30 and 32 rigs. In any given week, we may have 2 or 3 rigs that are mobilized. We only count the rigs that are on location and drilling when we represent them on a map like this. But there are typically 2 to 3 rigs that have moved to different locations, so they're mobilizing, but they're not yet drilling. And occasionally, between the state lines, we have rigs that jump back and forth between West Virginia or Pennsylvania and Ohio. But 30 to 32 rigs has been a pretty constant number over time. And one of the things that you might note is that the drilling times for the Utica Shale have dropped significantly. Some of the early drilling may have taken 30 days and sometimes up to 40, 45 days to drill the well. Now, a lot of these wells are in the neighborhood of about 7,000 feet deep, and then they have laterals that may extend out for an average of about 7,000 feet. It took 30 or more days to drill those initially. Many of the companies are at a drilling rate of about 17 to 20 days per well now. So the drilling experience in this particular formation has improved dramatically, and the cost of the wells is coming down because of the experience the companies are gaining through that process. Okay, this is one of the things that, this was a slide in the director's presentation. What I want to point out is where we think the drilling, the permits, and the producing wells is going to go. In 2010, if you can see this slide, we had 2 permits that were issued. So in the whole year of 2010, we issued 2 Utica horizontal permits. In 2011, we issued a total of 86 drilling permits. Now remember, these are good for, in most cases, 2 years. In 2012, calendar year 2012, we were up to 376. This happens to show some shading. The darker shading under 2013 would show actual permits issued to date, but then we project that a cumulative 525 permits will be issued this year. In 2014, we project 750, and in 2015, we project 1,000 permits will be issued. Now, along with these permits issued numbers, we also anticipate that in this calendar year, we will have approximately 225 new Utica wells drilled. In the same year, we anticipate that an additional 275 Utica wells will become productive or go online, taking the state's total to about 362 wells in production. In 2014, with the 750 permits that are issued, we anticipate that approximately 400 wells will be drilled in that year, and then about 300 additional wells will go into production, bringing the cumulative total wells to production to approximately 662. And finally, in 2015, with 1,000 permits, we anticipate about 500 wells will be drilled, about 350 new wells will go into production, and we'll have a cumulative Utica production of just over 1,000 wells. Now, this is significant growth. You can see the trend, and we think that will continue. One of the things that you may wonder or have questions about is the trend is not as fast as in some other formations. The Marcellus in neighboring Pennsylvania, for example. In about a 5-year period, they went up to about 6,000 wells drilled, many of those in production already. One of the things that has occurred over time is the companies have realized that they have a huge capital investment in the wells as they drill these. The initial drilling might be $10 million, might be more to drill a well. As they become more efficient, that cost goes down. Many of the companies in their quarterly reports to investors have noted that the well completion costs now are in the $6 to $6.5 million range. But without infrastructure, you have stranded capital. So many of these companies are deciding that they'd rather have a slower drilling rate. It's kind of like the chicken and egg. Which do you do first? A company can invest a lot of money in drilling a well, but without a midstream infrastructure, they have stranded capital, no production, and they don't regain any of that capital. Now, one of the significant differences in this drilling, let's go to the next slide, is this is the same production report, but I want to point out a couple of different things on it. We report oil. That oil is likely condensate in most of these wells. The American Petroleum Institute grades oil by its viscosity. The viscosity of the oils in Ohio, in the Utica, are likely in about the 55 API gravity range, and they may go up to 70 or potentially even higher than 70. Now, to put that in perspective, that's a very volatile type of oil that might evaporate very quickly. It's not thick. It's almost water-like. Its chemical composition has a narrower range than thicker crude oils, and it often sells at a market value of 85% of the more standard crude oils that you might be used to. Another thing to note on this production report is the companies do not distinguish between what you might term dry gas and wet gas. Now, the director mentioned that wet gas are gases that contain sufficient quantities of other gases that have a strong potential to be extracted. Now, typically, a wet gas will have elevated levels or percentages of ethane, propane, butane, pentane, and hexane. Those are valuable commodities. And they also cause the gas need to be handled and treated different than the more conventional gases with much lower percentages or quantities of those materials. If you were to put some of the wet gases into a furnace, the BTU, or the thermal capacity of the gases, is too high. It would likely burn out a hot water tank or a furnace because it burns much hotter than a conventional natural gas. So what the companies have to do in many of the cases is transfer this gas through pipelines that are different than the gas pipelines that deliver gas to your homes. Send it to a processor, and then through that processor or fractionator, a company will strip out components and break them down into their individual value components. Ethane oftentimes goes to chemical manufacturers. They will often send that to a chemical factory, sometimes a plastics factory. Propane is often used as an energy source. Butane is, in the South, it's used more as an energy source, but in other areas it's oftentimes used for the chemical or other industries. These are going to be very, very valuable products, but these production reports do not distinguish or evaluate the quality of wet gases that are in this. Now, many of the company reports indicate that the BTU content of the gases might be in the 1250 range. Now, typically, gas that may go into your home through a domestic supply may have a BTU range of maybe around 980 to maybe 1,000, 1,100. Much above that, unless there's blending, the gas, as I said, will burn too hot. So these gases will be treated differently, and this is why many of these production numbers are going to be relatively low. Now, I'd like to point out a few of the productions. Sean, can you scroll to the next page? Devon Energy. Devon Energy drilled a number of wells. They drilled in what might be the western fringe of the Utica play. The Devon numbers are over here. They're showing that they had oil and gas as zeros. What the company may have done is, after they drilled and completed their wells, they may have decided that hydrocarbons they encountered, and they did encounter hydrocarbons. They drilled in Knox County, Licking County, Ashland County, or not Licking, Medina County. They evaluated the economic potential, and based on the company economics, decided that these wells may not be economic for their play in Ohio. Now, this isn't uncommon. What the companies will often do is spread out, try to define the play, and define where the economics of the play are. Shouldn't base the economics on single wells that are drilled in a county, but for this company, they may have defined where their economic play is. Let's go to the next slide, please. This is a slide of the midstream infrastructure.